For the time being, we are turning the spotlight on KEI Industries. We have Mr. Anil Gupta, CMD of the company, joining in. Mr. Gupta, thanks for being with us. So, we really want to understand what the second half of the year is looking like for your sector and, of course, for KEI in particular, because up until now, it's been fairly steady demand for wires and cables. So you tell us, what do you see ahead and how do you expect the second half to shape up?
Yeah, good morning. Thanks for inviting me. Second half of this year, this financial year is going as projected, and we expect a overall growth of around 18 to 19% in the full year period. And I think the demand is pretty strong, and I see no challenge in achieving the growth trajectory in the second half as well.
All right. Hi, Mr. Gupta. Good morning and good to see you, Ben. You're confident on growth. I believe at a recent conference, you said that, in fact, demand is very, very strong and getting to these numbers will be no problem. I think the following year, you're guiding for close to 20% growth as well, if I remember correctly.
From in the beginning of the year, I mentioned a growth of 17 to 18%. And I think we have delivered more than that, much more than that in H1. Okay. And actually, I'm always conservative in my projections. So I don't want to over-project. We should be able to achieve whatever I have said.
Okay, all right. Give us a sense in terms of exports. On a low base, did see a good uptake. So if you could tell us how are things looking out there? And I believe the exports to the United States has been weak, obviously, because of tariffs. But in Europe, you're seeing some kind of traction out there. So fill us in on that front. And also, if you could help us out with the margin difference between domestic and exports.
The export remains pretty strong in all our export markets, Europe and Middle East, as well as Australia. And so far as US is concerned, yes, our projection was pretty strong this year, but it has dropped because of the tariffs. But we are able to make up the shortfall from other markets. And regarding margins, I think there is a margin difference of 1 to 1.5% in export markets, better than domestic market. And as we are building up capacities, we will be able to grow our export as well as margins with the economies of scale.
All right. And I think you're guiding that exports will be in the high teens, right? As a percentage of the mix, 18 to 19% of the total mix is what you're looking at. And yes, on a year-to-year basis, you're expecting margins to improve as well for the company on the whole by around 75 to around 100 basis points, for the coming year, FY27 as well, in comparison to 26?
Yes.
Okay,
definitely. Yeah.
Just one quick, I want to just continue on that margin point. You don't think, and we've discussed this in the past as well, right? And I think you were the one who told us once when copper prices go up and there's an unprecedented runaway move, if there is an unprecedented runaway move, what it does is, it's of course passed through and there's hedging, etc. But it kind of impacts volume of work, etc. And I think we had KEC recently who kind of sort of alluded to that as well. Anything you can tell us on this, sir?
See, the pause comes only for a short period, because the contractors who might have taken contracts on firm prices, they think that prices will go down and they try to wait for placement of new orders. But eventually, they can't wait for more than a month or two. So eventually, the demand comes back. So far as margins in rising market is concerned, my observation is in several years that it may impact 0.5% plus or minus, depending on the market situations or market sentiments.
Okay. So this guidance which you've given out, which is for improvement, that takes into account all of this?
Yes.
The copper price rally, etc.
Yes, we always take into account, and we have delivered even a revenue, volume growth also of 15% in the first half. So it is not just the turnover by way of prices, but we always, observe the volumes, not just the value.
Mr. Gupta, since we're talking margins, one obviously added component of that conversation has to be what the competition is doing. And the earlier part of this year was spent really discussing that. The deep-pocketed, large business conglomerates that are getting into your space. Now, I don't know where things stand. I'm not quite sure if that product has already hit the market, the Adanis, the Birlas, and if it has started showing up in any way. Can you just update us what's happening with respect to competition from these other large players?
Yeah, so far, no one has entered the market, neither Ultratech or Adani. And I had said in my earlier interviews also that even if they enter, I'm sure that our growth will not be impacted. We are working our growth based on larger territories and geographies and larger markets and segments and the product lines, instead of just focusing on traditional product lines of the construction and building industry.
No, absolutely. But I was just asking, you have your ear to the ground, so what are your channel checks indicating? By when do I think they announced their plans in March of 25, now we're at the end of 25. So what are the channels saying? By when will they be a presence? And then, of course, we'll see how competition plays up. And you all have been, old-time players, old-time hands. So what timelines are we looking at when this competition actually becomes real in the market?
In my opinion, it takes minimum 2 years to build up a plant and launch the product. So that much of time anyone is going to take. That is for wires. And for cables, if it is medium voltage or high voltage cables, it is more. So I think next year also, we don't see much impact due to them.
Oh, okay. On a side note, just a different tangent, I'm just asking this. The fact that there is a huge data center build-out that started in India, and we know that power is a huge part of it, and a lot of the power equipment suppliers, transmission companies, they're seen as a bit of a play on this data center build-out. Can you tell us if this has any direct implications for you?
Of course, every demand coming from any sector has a cascading effect on the demand. And data centers, they require power source or energy source from 3 different sides. So the incoming power demand increases, incoming demand for cable increases because to bring the incoming energy. And also within the data centers, there is a substantial requirement of wires and cables to interconnect their panels or systems. So definitely it is seeing in the demand, but this is just one of the sector which we cater.
All right. Mr. Gupta, I don't know whether you have a number offhand, but I believe one of your competitors, that is Polycab, they said for 1 megawatt of to set up of data center capacity, the total cables and wires demand will be around 3.5 crore approximately. Do you have any rough numbers in terms of a matrix out there? And that's why they believe that this data center push with the 6 gigawatt of data center addition, it'll be a big tailwind for the industry. Do you have a rough matrix out there?
I agree with it, but I don't have the actual numbers that how much wires and cables will be consumed with 1 megawatt.
Got it.
But I agree with these numbers.
And how much do data centers right now contribute to your revenue? I'm just trying to get a sense, your exposure to data centers and how you see that growing.
Actually, we have not quantified the numbers.
Okay.
Which are going to data centers.
All right. Final question, sir, before we let you go then. Tell us about this GST cuts that we have seen. They're supposed to propel some kind of a demand for housing wires. Have you seen signs on ground out there? If you could help us out with that. What would the ideal mix for you be between cables as well as wires? If you could tell us there. And expansion is on stream, right? Sanand, it was supposed to be in September, November. I believe next week you're going to cut the ribbon out there. Is that correct?
Yes, we are going to commence the production in next week, first week of December. And so far as this wire segment due to GST is concerned, actually, I don't think that we are able to quantify it so far, because October month was the festival month, and November is just going on. So we'll definitely quantify. I will let you know in the next conversation that what is the impact of GST cut on the wire sale.
But demand is strong enough. That's all you'll have to say with regard to cables as well as wires.
Demand is strong enough, and demand is basically related to the construction activities. I mean, I don't think that just because of some GST cut, somebody is going to buy the wires for just keeping it.
Yeah, but it gets cheaper, then you get more adventurous, right? We got that point with regard to demand being strong. And you want to give us the rough breakup about how will you see the wires and cables, mix progressing from here on?
Our cables mix will remain 75%, and wires and flexible will be around 25%. Yes.
Always a pleasure talking to you, Mr. Gupta. Thanks a lot for joining in. 18% to 20% growth on the top line. Margins will continue to improve. Strong traction both on ground as well as in the export market. And Sanand facility set to cut the ribbon in the coming week itself.